Tesla stock is about to go through a massive short squeeze if tomorrow's data indeed shows inflation is falling off of a cliff, and the Fed will be able to cut rates sometime later in this year, or at the very least to stop raising rates at the aggressive pace that we have seen over the last year and a half. Ladies and gentlemen, the rally that you have seen with Tesla has very much been a fundamental-based rally. Fundamentals can explain every step higher that we have seen. Well, this short squeeze and the CPI report tomorrow are going to take this thing to a whole new level. We need to get into the latest, what the markets are pricing in for the Fed, what the markets are expecting for CPI, as well as a new note from Goldman Sachs suggesting the S&P 500 could soon be close to new all-time highs. So before we get into implications for Tesla, where Tesla could go if CPI is good and a short squeeze, and look at the charts and a Goldman Sachs note, everything else that we're going to look at here in this video, I think it's very imperative that we talk about CPI here. Last CPI report, headline inflation came down more than expectations, whereas your month-over-month readings did not do so. So you had a weird divergence. Markets ripped because headline came down, which is ass backwards in my personal opinion, but who cares about my personal opinion? Markets are going to react more to headline numbers, which doesn't make a whole lot of sense, but we're not going to argue with it. Now, your inflation rate year over year, the headline number is expected to come in at 4.1%. Last month, it was 4.9%, but what I think the markets are going to be encouraged by with the year-over-year numbers is also the month-over-month numbers for headline. Last month, the month-over-month were 0.4%. You're expecting 0.2%. So 0.4% times 12 is 4.8% on an annualized basis. At 0.2% on an annualized basis, that is 2.4%. That is a level in which the Fed will likely feel comfortable pausing. The problem is core inflation. Your core inflation rate month over month last month came in at 0.4%. You're expecting another 0.4% reading. That is 4.8% on an annualized basis. And the headline core inflation rate came in last month at 5.5%. You're expecting that to come in at 5.3%. The difference between headline and core is really that of shelter. That's a big kind of part to core that is keeping it higher, whereas food and energy prices falling is helping headline come down by quite a bit. That's why a lot of economists right now are expecting the Fed to pause, because that headline inflation number is expected to fall so much, and that month-over-month headline number is expected to be back in respectable territory for the Fed. Again, 0.2% month-over-month is 2.4% on an annualized basis. That's okay with the Fed, but core being at 4.8% month-over-month, if you annualize that by 12 months at 4.8%, is not comfortable for the Fed. So the Fed's going to give you a hawkish pause. The Fed's going to bring out the talons here, and they're not going to raise rates, but they're going to say, hey, if inflation does not continue to fall, specifically core, your shelter, your leisure, travel, hospitality sectors, your services, does not continue to fall, they will give us more rate hikes. Now, that's the beautiful part. If headline inflation comes down as we're expecting, or maybe it doesn't even come down as much, like the headline month-over-month reading could come in at 0.3%. That's fine. It doesn't have to come all the way down to 0.2%. If core inflation comes down more than expectations, that is where Tesla absolutely goes parabolic. That is very supportive and suggestive of inflation as a whole coming down, the Fed being able to cut rates by the end of this year, and an overall soft landing. So the main focus, believe it or not, is going to be core. So if core comes in softer than what we are currently expecting tomorrow, that's going to give your sectors that are very much interest rate sensitive, like automobiles and home builders, things like that, a much larger rally, because after all, Teslas will become cheaper to finance. And that will open the door for more people to be able to finance more vehicles. Now, this, how it works essentially, is financing revolves around bonds. Like your 10-year bond is a huge instrument for real estate loans, for car loans, all of that. And when you think about it, if you could put your money in a 10-year treasury that gives you 3.5%, you wouldn't lend out your money to some random person to buy a car at 3.5%. You're going to go ahead and lend it out for a lot more. I just checked for Teslas last night. They have financing around 5.6%, which meaning that if a 10-year bond were to fall because people are expecting rate cuts and inflation to be gone, say a 10-year bond falls to 2.5%, your financing for Tesla could drop to 4% or 5%. And that would make the affordability for Teslas that much easier, right? Would open the door for more people to be able to buy Teslas. And that would be a very positive thing for Tesla stock. Just the forward-lookingness of that would be huge. Now, like we've seen recently, Tesla stock has already been rallying. So there is a potential here as well for a gamma squeeze. Now, a short squeeze is an interesting topic, especially with Tesla, because Tesla doesn't have a large portion of their float that is actually sold short, but they have almost 22 billion in short positions. This is up 50% in the last 3 months. So if you start to get $1 billion here, $1 billion here, $5 billion here, that covers on short positions, millions of shares worth, that's going to have a big impact on Tesla's share price if at the same time it's also met with positive news or a positive catalyst, in which tomorrow could be it for Tesla. It could be the positive catalyst that we really need to, one, solidify that long-term interest rates are going down. That's going to be a huge, huge positive for Tesla. Now, if you take a look at the option activity for Tesla as well, I think it's pretty clear that hedge funds and institutions are expecting a short squeeze or some degree of a large rally coming in the near-term future. If you take a look at Tesla, Tesla was up a little over 2% today. But the option flow was exceptionally bullish. You've seen today 464 orders totaling $346 million with a positive order value of 76%. Now, typically options are used to kind of hedge positions. So this didn't look like a position hedging kind of day for Tesla as far as the options. This looked like a I want bullish exposure to a rally in Tesla kind of day with the options. And if we look at a bubble chart for June 16th, go ahead and expand this out. You can see that a lot of people are targeting the 250 calls for Tesla, and these break-evens are going to put the stock likely around 260, 270. And there is a lot of option activity as well at the $300 calls. The open interest for the $300 calls on Tesla is 29,000. The volume today alone was 26,000. When you get a low open interest and a high volume on any given day, that means people are rushing into new orders, new positions. Same thing with the 270 strike. Today, you've seen volume of 40,000 for this 270 call, and this is by the end of this week. Keep that in mind. Whereas the open interest was about 29,000. So you've seen a lot more volume than open interest. Now, we'll see what happens tomorrow, if this actually was traders or whatnot, or if this was gets added to the open interest numbers. But when you see higher volume, good rule of thumb, when you see higher volume than open interest for a contract, that means that people are betting the stock is likely to follow suit in that move higher. Now, puts kind of virtually non-existent in terms and scope and scale of what we're seeing on the call side. The 230 puts have about 14,000 for open interest, and then you get even lower than that. 240 puts have 7,000 for open interest. Like, the puts really are not here. So if Tesla stock really does break above 250, that's where you're going to see a lot of option activity. You've seen 137,000 for volume at the 250 strike alone today. 30,000 for open interest. Let's say tomorrow you have an open interest of 100,000 for the 250 strike that expires by the end of this week. If you go ahead and actually pull that into a calculator, you do 100,000 times 100, because every contract, every option represents 100 shares. That would be 10 million shares that potentially would need to be bought of Tesla coming tomorrow. And that's only one expiration. Now, volume has been relatively high with Tesla. Today, you've seen about 150 million shares that were bought. That would be 7% roughly of the volume that you've seen today in potential market maker buys based off of the 250 strike alone. Not to mention anyone else buying the stock, not to mention any shorts covering on short positions, or any other bullish factor that could be at play here. So I do think a gamma squeeze could also feed into this narrative. Now with Tesla specifically, you need to break out above 250 and you need to hold that. Now tomorrow, I think you're really going to get one of those moments where you either rip past 250 or you absolutely plummet. Keep in mind, this might sound bullish, and I do think it will be bullish, but there's a chance that headline doesn't come down as much as expectations and core goes higher than expectations. That would be your worst case scenario. That would mean Tesla's probably down 5% tomorrow. The market's probably down 2.5% off of that. That's also a possibility here. Although it doesn't look the most likely outcome, it's still a possibility. Now, if you break 250, in which you're at 249.75, at one point today, you hit a high of almost 251. And by the end of the day, you started to come down. Obviously, as people don't really want to front run too much of the potential CPI report tomorrow, they're really waiting just under that resistance level to see what ultimately does happen. But you are right here at your resistance level. Now, on an actual technical basis, you're above this long-term resistance line. That's hugely positive. And I called this out since Tesla was less than $200. Like, this has been a line in the making, if that's what you want to call it. You broke out above it. You have continued to rally ever since. If you break out above 250, you really don't have any resistance levels until you get to about 315. Now, I think psychological resistance levels will surely be there. 275 wouldn't surprise me if that was a psychological resistance level. Wouldn't surprise me if 300's a psychological resistance level. But 315 is where you were at during the peak of the rally in August of 2022. If you take a look at the S&P 500 during the same time, you are now well above your August peak for the market. So Tesla, relatively speaking, has underperformed the broad markets compared with the high that you've seen in August of 2022. So Tesla could again have some catching up to do. Now, speaking of catching up, that's exactly what Goldman Sachs expects out of the S&P 500. Goldman pushed back against the bearish stance that Morgan Stanley's Mike Wilson has with a new 4,500 S&P 500 target. They say that, quote, first, that the impact of interest rate hikes on growth is behind us, and second, that several areas of the market, including consumer cyclicals, tech, and communication services, experienced their own earnings recession last year and are likely to see accelerated earnings growth even as other parts of the market suffer. He writes in a fresh note to clients, his base case sees the S&P 500 dropping to 3,900. So he expects a drop to 3,900 before the markets end up closing at 4,500 by the end of this year. Now, he goes on to say that the average consensus on Wall Street is for S&P 500 earnings coming in at 206 for this year. He assumes that a soft landing is coming and $224 of EPS could actually be a reality with the S&P 500. Now, the S&P 500 is trading at around 19 times earnings. So 224 times 19 is 4,250 on the S&P 500, around 425 on the S&P, which is where the markets are at right now, roughly speaking. S&P is really at 433. So the markets right now are absurdly disconnected with reality based off of inflation expectations coming down. If that is validified coming tomorrow, that's going to be hugely positive. If it's not, you're going to have a big negative force on our hands. They also go on to say that they disagree with Mike Wilson, who believes current AI hype won't change the overall trajectory of the earnings cycle. They go on to say that they think that earnings per share will go up 4.9% to 5.4% based off of AI alone. I don't really think AI is going to be that big of a near-term impact to earnings. That's more of a long-term expectation. But hey, we'll see. And then they go on to say, Costin and his team goes on to say, in a mild recession, they see Fed easing leading to a 19% contraction in price to earnings multiples for the S&P 500 and a 9% drop in consensus 2024 EPS to $223 from $246 currently, pushing the S&P 500 to 3,400. So some people still wildly bearish on this market, and that's where you kind of get these weird divergences here where it looks like the bullish thesis is taking off, but there is a very strong bearish argument as well. And according to the risk on, risk off gauge, the US dollar, S&P 500, the NASDAQ, and the 10-year treasury are all in deep risk on territory. Oil and gold are in risk off territory, and that's kind of what you've seen from oil recently. Oil has been falling. So according to Goldman Sachs, there is more room to rally in this market. Now, just to recap kind of what happened on the day today with Tesla, XPeng, this is kind of a big deal, I guess you could say, for China, the Chinese market. XPeng stock popped as pre-sales for its answer to the Tesla Model Y actually surged. Now, I don't think Tesla's going to have too much serious competition from any of these secondary automakers. In May, Tesla sold more vehicles than XPeng, Li Auto, and NIO put together in China. So I don't think this is a real problem, but just more broader exposure that consumers get with EVs, the better it will be for Tesla. There's enough market share out of 1.4 billion Chinese people that Tesla doesn't have to fret about their 25,000 pre-orders for this XPeng vehicle. I think this was overall a net positive for Tesla stock today. Tesla was up. This article was earlier. It says Tesla was up 1.4%. Shares of BYD edged up 1.8%. Li Auto was down 2.3%, and NIO rallied 8.9%. So most of your Chinese EV names actually, it looks like, benefited from this announcement from XPeng. In other news, today Tesla was upgraded to outperform from neutral, a double upgrade with a $335 price target. And they go on to say that Tesla is seeing its vast U.S. investment in electric vehicle assembly and battery bear fruit in 2023. And they go on to basically talk about everything that we talk about, right? Autonomy and robotaxis and everything that we talk about here on this channel. Advertising, they even mentioned. So this was a huge price target increase. Now, Tesla could soon be at $335 per share. And as we pointed out in the last video as well, something that is worth notable to point out is that the average price target is still $191 on Tesla. That means you're going to start to see more price target increases and more upgrades to Tesla, as fundamentally Tesla has just gotten better and better as of recently. And this will help to push Tesla stock higher. Now, as far as what I expect from any potential short squeeze with Tesla, I had some people ask this question in the last video. I think if Tesla goes to 315, 300, you're probably going to start to find some support at 300. I don't think this is a typical short squeeze where you go up and come straight back down. Because why? Fundamentals are everything in the market in due time. If you squeeze higher, that's because the fundamentals have actually been improving and the markets have finally started to realize this, especially, again, if inflation does come down and it looks like the Fed will be able to give us easier Fed policy, less restrictive Fed policy. That would just increase the fundamental valuation to Tesla. And yeah, sure, you get an explosive rally in the meantime, but I don't think that means you come back down to these levels. I think it would mean some consolidation, right? If Tesla did squeeze to call it 335 or 350, to come down to 300, still be very elevated from levels now, that would not surprise me. But I do fully expect and think a short squeeze is possible tomorrow, and the most probable outcome if inflation does come down more than expectations. Not headline, but specifically core. We're already expecting headline to fall like a rock. If core can also fall like a rock, that's going to be a huge, huge positive for Tesla, and really not just Tesla. Automakers in general, stocks and companies that are heavily integrated with the financing ecosystem that are dependent on interest rates, all of those stocks could see little short squeezes in and of themselves, guys. So that is going to do it here in this video. Hit that like button and subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.